we had a dip again. We had a dip again. Um, yeah, it feels relentless out there. It feels well, yeah. How would I say it? I'm not sure about saying it's the end or something like that, but I do believe. Well, we're in unprecedented territory, right? And we have discussed this before about well where we are cycle wise, and I think um, honestly, technical analysis wise, well, a lot of time frames will look bearish. Um, so is lower possible? Yeah, lower is always possible. I do believe on the other hand that we shouldn't rule out the impact of the macroeconomics, right? Morning, Benjamin. Um, Something we discuss, and not because, well, I just want to be positive, um, but, well, I think if you look at like the numbers, if you look at the interest rates that have been like longer than expected, as high as they are right now, I was writing some things for some friends of mine about like the market state like the last 1.5 years after we had that top in 2024. um, and I think if you look back again, hindsight would say yeah, we shouldn't have gone investing big at that moment, but like everything at that moment, and all pro analysts and pro traders were like yeah, saying okay, this is it, right? Bitcoin making an all-time high, and like in hindsight, you can find of it whatever it is, right? Because that's always the hindsight. Um, so if you would ask me, would I do the same thing over again? Yes, I would do, um, because again, in well, if you're in that situation, um, it was dumb not to invest, right? And I think it's the same right now. I think it's the same with, well, I think everybody is calling, like 90% are calling for a bear market. Um, if you go on Twitter or any socials, you'll see a lot of talks about that. And I'm not here to say, okay, that is not true. Of course, there's absolutely things um, that point towards that, but on the other hand, like I've said over and over again, it's just your bias and how you look at the market, right? Um, so we had a big dip on Bitcoin right now from all time high, like 35%. Um, if it's true that Bitcoin follows the business cycle more than it did the 4 year cycle, um, well, then we're on the verge of something, right? And I think at the same time, and I kept saying that over the last sessions we had, um, in my opinion, again, the 4 year cycle still in play and should point to Q1 2026. But again, I think this is a market we just have to, well, take week by week. Um, like we had the dump, well, we had like a decent, we had the monthly close and then immediately it dumped afterwards. People, I say, people, they say it was like the Bank of Japan news that dumped the market. It did dump overnight though through Asia session. Morning, Nick, and Chris also morning. Um, but again, it's yeah. I always say like, is it the news that dumps or is it well the dump and then we tie it to certain news that was around that moment, right? Um, but yeah, we can look at just for a quick glance, we can look at Bitcoin chart. Let me open up macro. Doo, 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 doo. So yeah, um, I think. Well, this is the week. This is all the weekly charts, right? It's all the weekly charts. So this is Bitcoin dominance. Morning, Jay. Morning, morning. God damn it! Stop it. So we had a trend line breakdown here. We had a retest last couple of weeks. I think Sherlock just put out the bear market update. Using all the totals, I think he was. Well, I didn't read it properly. Just scanned it, saying that he expects Bitcoin dominance to pull back and then go up again, based on another chart, by the way. I think at first, I think what we need to look at is just Bitcoin, right? Give me the higher time frame chart of Bitcoin. Let me add that here. Bitcoin USD index. I'll just use this one. Boom, boom, boom. All right. So, like first scenario is we make a higher, or we make a right shoulder here, right? So we'll see a run up from here. Could we possibly go for this low? Yeah, definitely could go for this low. This is the weekly though, so it could take time. But I think a lot of people say, okay, we probably go around here. So sweep that. Well, my drawings are not really nice today, but this is the 74.5 level, so 75k. I think Sherlock expects Bitcoin to hit this level. Then we could see, if that does happen, you want to see a move up from here and then, probably make that right shoulder. The other thing that you can still see, and like I said, or like I always say, it's like just how you look at the charts. This trend line is respected so far, this weekly trend line. So we had an impact point here, we had an impact point here. Just put it here. So what if this is the bounce over these couple of weeks and then we move higher and we make a higher here before we then get back and break the trend line? So it's basically, what I want to say is basically how you look at it. Because this is a possibility. We go and we break this trend line and then we go and retest it somewhere over in Q1. And that just means like, okay, this is a left shoulder and we have that distributive structure we talk about. So the other possibility is, we do get a nice decent bounce. So far we had the bounce here at the trend line and we go and make a higher high. This could just be, if we don't get here, it could be like either a SFP, for people who know what it is, swing failure pattern, or it could just be a higher low. So what if, I know you guys want to look for like positiveness and without like sounding like, oh yeah, you need to be positive, but what if this is just a higher low forming, and then we go and form a higher high? So then it's basically this structure here. Morning, JC. Where is it? Predictions, forecasting. Where is my shape path? So basically what you then see is this. And then finally we drop. Also a possibility. What I say is that, I said that the other day, never ever let just opinion of one person or multiple persons cloud your own judgment, especially when you're trading. I was talking, I think, not sure again who I was talking to. Some of the chats about, okay, I was in this long, I think it was Mosh, I was in this long, but then one of the traders put out a short bias or like, so I'm thinking or contemplating about closing my long. So the question was, what's your target, right? What's your take profit target based on, or was it based, or did you have like a TP management rather than not only have risk management? You should have take profit management, and stick to that. Stick to your plan. Never ever let somebody else talk you out of your plan if you plan or trade mechanically, right? So if you're based on gut feeling or whatever, yeah, of course you get talked out of trades because that's gut feeling. That's not based on facts. But if you trade mechanically, um, honestly, there's no way you should let somebody else talk sense out of you, not sense in you. Nick, I think I forgot to. The high timer gives a truer picture, though. Yeah. You mean the daily or the weekly? Well, I think what you can say, the weekly says, okay, we're not. Um, Sherlock, for example, talks about structure shifts in Bitcoin. Um, I think depends, of course, and I'm not saying he's wrong because I'm not going to argue with his technical analysis. But if you look at the weekly again, um, we only have a structure break if we break below this one. So if we break below this low here, so if we break below and close below 74, then it could mean, well, then the structure is shifting on the macro, so on the weekly, right? For now, we just have higher highs and lower highs. Higher lows, sorry, higher highs, higher lows. So basically this is the structure for now. So if you have a low here, then you have a high here, then you have a low here, you have a high here, you have a higher low here, and a higher high here, and then we have a higher low. So yeah. Of course, if you zoom in, and say, okay, yeah, but basically we broke here, and then we had a low here, and then we had a high here, and a low, and then we broke structure. So you can also say, well, that's like how much you want to zoom in, right? So you could say, okay, this broke structure to the downside, so we might see pull back into the golden pocket, which is around 110. And then we form that left shoulder or that right shoulder, and then, well, we go again. Yeah, it's just been relentless, guys, and I'm not really sure. I know I definitely have technical analysis knowledge, and I can look at charts, in my opinion. And of course, the problem also is with having so much different traders in here, everybody has their own opinion, everybody shares their own views. I think what you need to do is focus on what you do. And at the same time, I think what I said the other session also is okay, take apart your portfolio long-term investments and take that away from your day-to-day trading right now and your futures trading and your leverage trading, and focus on that, because whether we go up or down with trading, you can make money both ways. While spot holding can only make you money on the upside, right? So anybody in here, I would strongly advise to also, well, have some sort of money stuck into day trading, whether that be a small pot or whether that be a funded account. But I honestly believe that that is where your focus also should be. And of course, and I think what LLC says, okay, of course it's good to buy and bring your averages down, but buy strength, see where it bounces, and then buy. And for now, the strength just lacks in the market. And I think mainly that is, again, still because of 10th of October, what happened there, and it just like ripples out over the market. And at the same time, there is just not no money coming into the market. Like liquidity wise, there is no new liquidity. If anything, there's liquidity going out of the market and not new coming in. So yeah, I think that is the only way you can be Like, yeah, accept the fact what it is. Um, yeah, I honestly believe for now. Well, I think rather than being too much obsessed with the portfolio and okay, when's it going to happen and when's it going up, that's not good for your mental health, especially if it keeps going down or if it goes lower. What happens is you'll be so obsessed with, well, you need that to turn around and you need it to finally be there. And if you're daily constantly, how do you say it, constantly being able or being occupied with that, it hurts, and it has an impact on how you feel emotionally and mentally. And I think what happens if you focus, or you put your focus on day trading, you focus on futures and learning how to trade, maybe for yourself also, what happens is you see that no matter what the portfolio is going to do, you can make money regardless of the market going up and down. Now, of course, that takes time. Um, but if you don't start now, you probably never start, because at some point you'll get the focus back on the portfolio, and well, where's the futures trading then, right? And again, if you learn futures trading right now, and if you learn to day trade or follow signals right now, it becomes easier, because when macroeconomics do turn around, you'll see that trading becomes a little bit easier. This market we have right now is shit to trade because there is no volume, there is no, well, bounces are just, well, there is not real volume to trade. So there's no real trend, whether it's down or up. It's just like, well, we're in this, stuck in this range. And every push up gets bought down or sold down again, and every, well, push down, well, uh, continues, right? Um, yeah, exactly. That's the only thing you can do. You can choose to let it drive you crazy. You can choose to focus on the other stuff where you do have control, because we cannot control the market how much we want it, or we cannot control the macroeconomics. We cannot control whatever President Trump does in the office. We cannot control what happens. So, but what we do know, we know the facts that if macroeconomics do change, and if, well, I think CB posted the other day, like if you look at the alt season bull run 2017 2021 and you look at the rates, rate is now at 425. I think they were like respectively zero point 0.5 or something, or 0.0 to 0.25 or 0.5 to 1 in the last bull run. So honestly, I do believe, because of macroeconomics events like the terrorist war, the Russia-Ukrainian war, Israel war, um, in the Middle East, I think all of that has put like a break on the macroeconomics, on the break on the rating cuts, and I think officially quantitative tightening is stopped today or yesterday, so the 1st of December. So it was officially stopped yesterday, um, and that could be, well, basically that's what we're banking on right now. That we need liquidity in the markets. We need liquidity. We need people. Well, we need those rate cuts down so that liquidity worldwide, well, gets moving again and gets into risk on assets rather than risk off assets as bonds and all those kind of things. Good evening, Ian. Good to see you here, man. Ian. Exactly. Yeah, that's always a good thing. That's always a good thing, Daps. But at the same time, I wouldn't be bothered with influences right now, because there's nobody in the market. So who's going to be influenced, right? It's good, I think, for the long term, but like, it doesn't matter. Honestly, it doesn't matter when retail money returns. It doesn't matter. It doesn't matter because, well, money will start flowing, and things will do right. And I think it's good to be an NPCS and XNPCS, as these are projects that have been working relentlessly during, well, the down market. We have seen what happened to some of other projects. So yes, and then I think the only thing we can wait for, like, crypto wise, portfolio wise, we just need to wait on retail money. We need to wait on the macroeconomics to turn. In the meantime, we just have to focus on, okay, what's happening on the charts? How can we make profits from what we see happening? How can we, well, and we can do that if the market goes down, we can short, right? And you can still make some profits, and you can then use those profits to either, well, put them aside, making a pot, or you can say, okay, you know what, I'll bring down averages on some coins, um, which is eventually in the long term, in the long run, a good thing. Because let's talk, if we talk about Bitcoin and going to zero and all that kind of stuff, would you actually think that's going to happen with all these institutional investors, with all these ETFs and regulated things going on? Would you actually think they will let Bitcoin go to zero? I think, I don't think that's happening, right? Couldn't it could it be that we see dumps like we have seen? Yeah, of course, that is what happens. And um, there's a lot of things. I think there's a lot of things you can look at and say, okay, yeah, I want to be positive. And then somebody will say and come in, yeah, but I just look at the chart, so I look at factual, and this is what the chart says. But you got to understand, and I'm not saying per se that Sherlock is wrong or that he is right. Nobody is right all the time. This is Nobody is right all the time. There's nobody with a 100% track record. Nobody. Because the market does not care. Yes, it's based on systems. Um, you're funny, Nick. Nah, well, let's leave it at that, okay? She's right always. Yeah, that's what you say. Yeah, you're always right. But basically, you know she's not. But you just got to say it to save your ass, right? That's why you say, oh, you're always right. Yeah, man. Yeah, man. Okay, you're right. You're right. Um, but what I wanted to say is that nobody's always right. Um, but also nobody's always wrong all the time. So there's this, I think this quote, I'm not sure how it was exactly, but I'll search it. It's of a pro trader who did a quote on something like, yeah, like nobody, in this game, nobody's always right. Um, but you can also not be always wrong a long time. Anyway, happy wife, happy life. Yeah, honestly, that's true. So don't tell about the crypto portfolio right now. Else it's not happy wife and no happy life. Um, but yeah. So do you think that purely TA at the moment is something that we shouldn't just be looking at? Yeah, of course you should. If you, well, you always need to take technical analysis into account. What I say is that technical analysis, if done well, gets respected most of the time, but it's about probability. It's about saying, okay, this has a bigger probability to happen than this. And again, for everybody who sells Bitcoin right now, there's somebody buying. Because if nobody was buying, it would just, well, it would just go straight to zero, right? So there's people who sell, whether that be market makers or that need to close or the gaps in the books or whatever it is. There's somebody selling and there's somebody buying, and that's what makes a chart. I think you should be looking at the TA to trade and don't focus too much on, okay, well, don't focus too much on the sake of your portfolio when you watch the charts, because if you look at the charts and you see we're bearish, like let's take the example of me. For me it's very simple. My bias is made up by the EMAs. So if we're below the EMAs that I use, I'm looking for shorts. If we're above, I will look for longs. Now if we go and look at the charts, just my day trading charts here. You still? Yeah, I'm still here. For me, it's very simple, right? Because it's about this. So here's the 50 EMA and here's the 200 EMA. So as long as we're below this, I'll look for. So what I'm waiting for, trading wise, technically, I look for a touch of the 50 EMA and then a 3-bar reversal to the downside. But I will do that on the hourly. So this is the moment Like if this closes, and this is just pure based on what I trade. This is not saying, oh yeah, we're going lower per se. But if it forms a 3 bar reversal at this point, for me, that's my model saying, okay, take this trade. Why? Because we're in a downtrend. We are below the 50 and the 200 EMA. We're going to touch, we have swept the 50 EMA here. So if this one closes, so the hourly is still 23 minutes, doesn't look like it for now, but you know what happens. It can happen in the blink of an eye. So if we close below 86.4, I will take a short. Only on this hour, unless this eventually goes higher, makes a new high, and then, so as long as we're below, and which is this 88,900, as long as we're below this, I'm bearish based on purely TA or the way I trade. Not necessarily, somebody else can say something differently, right? But what happens is, if I link this too much to my portfolio, then it's shite. Because you know what happens then, sorry, I was trying to read and at the same time, I got a pause, brain pause. I was reading and at the same time was trying to talk. So what I wanted to say, I'll come back to you in a bit, Nick. What I wanted to say was that if you have a too big link between your day trading and your actual portfolio, the portfolio, only you want to do is the market to go up, right? So you will give less weight, or you try to avoid shorting, because if you short and you've linked too much to your portfolio, it means, okay, but if I'm short, I basically tell myself my portfolio is going down even more, right? So if you have to take those two out of the, you have to take your portfolio and the emotional connection you have with your portfolio, you need to take that out of your day trading. If you day trade, you purely focus on the chart, what's happening right now. You purely focus on your model and the way you trade. That's what you do. And if your model is with your confluences and your model shows up, you take the trade. That's how simple it is. Because you know in the right ways, you have back tested it or live tested it, and you know, okay, if I take this trade enough times, I'll be profitable. For me, I know I take losses. It happens. I think I'm even 50 or 60% profitable. So that means I take 40%, 50% losses, but still be profitable at the end of the year or over a longer time span. I can have months I'm not profitable, but in the long term, doing the same thing over and over again makes me profitable. And that's eventually what you look for, right? And of course, if you find yourself being profitable, you can then eventually start to tweak things, but not after a month of being in drawdown, not after a couple of weeks trading. That's not enough data to actually prove yourself you're long-term profitable, and the data tells you this. So but that's something else. Now, Ian, I was thinking also about the macroeconomic news for long-term shit. Yeah, but that is, the idea should be long-term. It should be macroeconomics, because that has an effect on risk on assets. And we are in risk on assets. And yes, it went differently than we thought at first place, but that's where the focus should be. And of course, you got to take TA. I think we also look at the charts, but I think for long-term macroeconomic views, the charts tells you nothing, right? It still will tell you support and resistance and nice, but it has to line up with the macroeconomics. And that tells us something, like we haven't been in that risk on mode for worldwide liquidity. So that's what we need to wait for before I do believe that everything goes on the up. But for all we know, next week we have a rate cut and things turn, right? So just something we have to, look to and just see how it comes. I think that is what, if anything, we taught or we learned from the last 1.5 years. Nick, what you're asking, so you give more confluence to the 50 EMA over the second candle being larger than candle 1. Yeah, this is like if you have two bullish candles and you then have one. No, yeah, well that's depending on how you trade it. There's different ways. I trade two. Basically, and like I said, this is something I developed for myself. So you gotta look at your own data and say, okay, what happens and what happens not, and what works. I basically trade the classic three bar reversal and the three bar reversal with a doji candle in the middle. And this is a if, and it's not. I don't see it happening in this 20 minutes, but we never know. We're heading into 1 o'clock, so or noon for you guys, but usually we'll see some little bit of volatility. But for me, there's two sorts of three bar reversals that I trade. It's the one that has two buys, two bullish candles, and then closes below without breaking the high. And I do the one that has, well, first candle basically doesn't matter. Second candle needs to be a doji, and then and that's like basically the two. But if this one was a bearish candle and this one was bullish, it was out of the question that it would form an valid three bar reversal for me. Again, I think that's what makes trading so complicated. Look up three bar reversals, and there's different opinions on how it works, or it's different opinions on how they form or where they form. Um, and I think that makes it again harder, that you cannot just mimic something or somebody. Um, so, like, still, this one, what I do, I use, Nick, for you, I use the 50 or the 200 EMA. I use them as confluence. I always need to have a sweep of the EMAs or a touch of the EMAs. So if a three bar reversal forms here, so let's say if I, well, I can show this maybe. So I can, if I ignore, well, everything. So don't require the EMA touch, don't require anything, then like you say, this three bar reversal you could have taken, because eventually it gave you a 1R. But I, well, have the data and I do different setups and then say, okay, but if I take every three bar reversal setups that forms without touching the EMAs, I'll be even more wrong than right? So it doesn't help my profitability. So that's why I do use require EMA touch and EMA direction. So my EMA direction is, well, the bias, so above and below. So above this, I would always look for longs until we get breached, and here I will always look for shorts until we get back above the 50 and the 200 EMAs. So it goes for a lot of coins. So what we started with is, okay, am I bearish? Yeah, short term for now bearish. Why? Because we're still trading below those EMAs on every coin. As you can see here, ADA just now touched. So it's something to, well, to keep an eye on, to see for the next hour what's happening or what's forming. As you can see here, there's a three bar reversal that hasn't been touched yet. Sometimes that gives us added confluence, but as you can see here, well, this will not be a valid entry anymore for me, because, well, you know, the 15 to 200 EMA here. So before we get there, there's a lot of things happening. So like I see, like you see, most are under the 15 200 EMAs. This was like, this hurt it, you know. I exited this trade here. So I was in this, goddamn, sometimes it's just also what life is, right? So or when you get like, well, I talked about not letting somebody else or someone else or anybody else's opinion mess with your head. I'm going to tell you or share a story that also happens sometimes to me. I think what I did here is I had my first, so I entered here and I had my first CP on this low, which like missed, well, by a ball sack hair, you know, how you want to call it, but it missed like, yeah, with like, I had my first close at 83.10 and eventually it went down to 83.12. So that was like kind of fucked up, you know. Okay, think I had my first close there, and then I would just let it ride, and god damn it. And then eventually, um, I closed when we breached back above the 50 EMA, because there was some talk about somebody saying, okay, the market's turning around. Um, so instead of just, well, let's put it to break even and see what happens, I closed it here. So, and I closed it still for a win. So I think it was still, I was 1 hour up or something like that, because I did take some profits. But then we had like this whole goddamn dump. Uh, yeah, that's like what I tried to tell you. I won the sweep of the EMA always. Um, yeah, and then eventually it went down to like 8R. Anyways, what I'm telling you here is just trust your gut. Well, not your guts, trust your model. So trust the way you trade, because you can take, and I'm not saying you were actually, I think at the moment, at that time, I think would have been this previous week low would have been the target. So it would have been full TP. But what I'm saying is that just trust, because, well, you can take like these 3-4R trades, and then you can take 1 or 2 losses and you're still profitable, right? So just, well, focus on the mechanics and don't let anybody else tell you too much about what you should not or should do. And that's basically, I think, the whole point when day trading. And that's, I think, also what makes it so hard to learn to trade. Well, not, it doesn't make it hard. It's not hard to learn to trade. It's hard to get your mindset in check, honestly. And it's hard to, well, and that's mindset and emotions, but it's hard to let the opinions of others tell you different than your actual plan. So having the confidence and the conviction that your plan works. And how do you get conviction and how do you get confidence in your plan and your mechanical way of trading is by doing the same thing over and over again, and do not do not aim for perfect. Do not aim to make a model that completely works before you start trading it. What you need to do is you need to gather data. And what we always do, or what a lot of people do, they do it differently. What they do is they will start without the data, and they will start, okay, I have to find something that works over and over again. And then they have a model, and then they try it, and then it works 1 or 2 times, and then the third time it goes wrong, and you take a loss. You say, oh yeah, I need to tweak it. So how do I make something that works all the time? There's nothing that works all the time. Nothing. No one strategy. If that was the case, everybody was trading that. Somebody would sell it and people would buy it because, well, that's a guarantee to make money, but there is no guarantee. So the only thing you can do, again, is have that system and take those trades over and over and over again without tweaking it when you take a loss, because losses are part of the game. Losses are part of winning. If you can lose, you cannot win. It's just simple as that. So have risk management in check. Always risk first. And then basically, TA wise, there's nothing can go wrong. But there's a couple of things why things go wrong. It's because we want too much too fast. We see people making tons of money and we say, yeah, I want that too. So I'll buy a 50K account or a 100K funded account because I want big winners. We focus too much on the outcome. We focus too much on the price. We focus too much on the profits rather than actually learning to trade, rather to actually learning to trust your process, to trade the plan, to plan the trade, to have the discipline to do the same thing over and over again without losing the goal out of sight. The goal is not to make money. The goal is to be a trader that trades throughout, with a strategy and mechanically. And that should be the goal. And if you set that as your goal, eventually profits will come. Because I want to bet my life on it. There is nobody who cannot be profitable and cannot trade. Everybody can learn it. But the problem is we overcomplicate things. We see these long-term traders that have been trading for so long with their different indicators because that suits them and that works for them, and think, yeah, okay, I need to learn that too. We see Soul or we see Harsh do certain stuff, and then we say, yeah, okay, but if I learn that, I am profitable. We go on YouTube, we search winning strategy, and then we say, yeah, this strategy has an 80% win rate if you trade like this during whatever hour it is of the day. And they say, yeah, I'm going to do that. And what happens is they give you these nicest examples on YouTube, and then you start to mimic it. Probably if you would mimic it and you would keep at it for a longer time, you'd probably be profitable. But the first time you take a loss, the first time you take two losses in a row, you'll start to say, this is not good, doesn't work. 80% win rate means still you lose 20%. So if you take 100 trades, you still lose 20. Also, I would never believe somebody on YouTube saying, yeah, this has an 80% win rate. Just clickbait. Exactly, Benjamin. That's what you need to do. And take them over and over again in the same way. And still, 10 trades, let me be honest, 10 trades does not tell you the whole story. So what if from those 10 trades you lose 6, right? Would that mean the strategy does not work? I do believe you need more than 10 eventually to tell something about profitability. And I'll tell you why. I'll give you the example of the coin flip, right? Coin flip, 50% chance, heads and tails, 50%, right? If I flip a coin right now, you say heads or tails, it gives you 50% chance of being right. Flip it 10 times, nobody says it's going to be 5-5, right? It could be even 9-1 for all we know. So flip it 100 times, well, it can still be 60-40, 70-30, but the more you flip it, the more you flip it indefinitely, or how do you say that? The more you flip it, eventually it gets closer to that 50%. And it's the same with finding out a trading strategy that works for you. I don't share my indicator on the 3-bar reversal indicator because I think the only way you can actually say hi to them, Dabs. Have a good meeting. Tell them I said hi. Anyways, I think the only way you can actually learn to trade is this: gather knowledge based on what you like and what you easily spot on the charts. Learn things. And it's basically what Harsh does in his course, if you ask me. He gives you a lot of stuff. He gives you a lot of knowledge. And what you do is you pick those things out of there that you like, that feel natural. That if you look at a chart right now, you say, okay, I see this trend line, I see this fair value gap, I see this golden pocket without even drawing lines. And of course, it becomes easier the more you do it. But pick those things that suit you. Pick those things that you like. Pick those things that you feel natural with. Make a model and start testing it. Don't overcomplicate things. Don't overcomplicate. What the fuck's pucker? Don't use words I don't know, okay? You give me brain freeze. Anyways, what I'm saying is, do that. So keep it simple for yourself. Don't overcomplicate it, because if you overcomplicate things, say, okay, so if it takes you so much time to even understand what you're actually doing on a chart, how are you going to be able to get that emotional and then mental stability? Because it will fuck you up either because you don't understand it. Yeah, fuck, I don't understand it. What did I do wrong? What did I? So make something simple. Thanks, Pucker man. What I'm saying is that sometimes it helps you just start very easy. like I once started with breakout and breakdowns of trend lines. That's all I did. So like you have a trend line with 3 taps. The moment it breaks, I'll wait for a retest and I go short or long, right? So it was the breakout breakdown strategy. Sometimes I think, yeah, okay, why did I stop trading that? Because it was profitable. Maybe not as profitable as you would like, but it was still profitable. But what you can do is take a simple strategy then and just start to test it. Because the simpler the strategy, the easier it becomes to gather data and to be focused on the actual process rather than, well, what it does in your head, etc., etc. ChatGPT writes my indicators, but he does a good job, I must say. Um, and basically, I started writing it because I wanted a mechanical way of backtesting data. So I always, like I say, I trade a 3 bar reversal. Um, I stopped a while and then I got back to it because, well, I still like it. It's my baby. Nah. But what I did was making an indicator that shows you all these 3 bar reversals on the chart gives you, well, it gives you a mechanical approach. So it shows my 3 bar reversal once it's formed or while it's forming, and then I have to say, okay, are there any how do you say it? Are there any confluences that fit my model? Um, yeah, that's a good question. Yeah, it can, but it's fucked because you need to set the alerts. I think on every pair. So if you trade 10 pairs, you need to set 10 alerts. I do believe you can build it in. You can build it in, but it's not like there's no general alert. I wish it was like, okay, there's now a 3 bar reversal forming on this pair. So you have to put like every pair has its own alert, and then, well, yeah. Um, so I think with some, it could, depending on how complex or how well your indicator works. But I definitely believe that it's possible. I definitely believe it's possible. All right. So that goes quickly. Like we've been here for an hour, and there's always enough talk. For the last Nick, because I saw you put out. I missed. Well, I saw it just before I had it here, and I missed. Basically, I missed your question. Um, so you want me to give you feedback on that, or I think your question was, would you say the volume in candle tree is too small? I can't say because I cannot see the volume, right? So, but if you wanted to ask me, it was below. I'm not sure. Is that the 50 EMA you took there or you traded with? Um, so again, if you know how my bias works, it's below the 50 EMA. So yeah, exactly. So and volume sometimes I like it. I like to look at the volume and I want to see like an more than average volume on a 3 bar reversal. So if you, well, as last, just give you the example. I'll just zoom in because like you see here, once a 3 bar reversal forms, I want to see at least, this is the 20 moving average of the volume on the candle be at least higher than the average, just as added confluence for volume. The best thing you want to see is a big spike in volume on the last bar, but I think these kind of things can be different for everybody. I just look for what happens. The wicks are my confirmations. Wicks are my confirmations, so I always use the total bar. So yeah, you're welcome, man. You're welcome. So hopefully you guys enjoyed it again. I'm back tomorrow morning. I think I said 10:30 UK time. Well, we'll see. So yeah, I put it out. Wishing you guys the best day. Yeah, always good. And I'll have a great day, and we'll talk again soon. Ciao, ciao. Bye, bye.